Hello, guys, and listen, welcome to your market report for this Wednesday, the 3rd of October, 2018. And listen, I'm glad to have you guys here. Now, what we're going to do is, well, we got a little bit of a day-to-day where everything is just it's kind of like what you call a slow day. But we're going to run through the markets fairly quick, so it's going to be a fairly quick market report this morning. And we'll get the chart started right here. And the first thing we're going to take a look at is cryptocurrencies. Cryptocurrencies is 64.50. And what it's doing is it's kind of like right now like a pendulum. It's just like it doesn't know which way to turn. It's just sitting there, and it's kind of like in a state of a blissful state where there's very little activity, and it's just come right down to a pinpoint at 6,500 bucks, and it's just kind of deciding which way it's going to go right now, whether it's going to go to the downside or upside. I'll tell you what, I don't think there's a whole lot of downside potential for it. And I'm going to tell you, these guys have said, hey, you know what? There's like a 68.50 upside limit. That's baloney. That's baloney. If Bitcoin wants to take off, it could pierce through that so quick it would make your eyes spin in your head. But at any rate, that's what Bitcoin's doing today. Now let's take a look at the cryptocurrency market capitalizations. And we're looking at $215 billion for the industry. And we're looking at 52% Bitcoin dominance. And most of the coins are in the red today, a little bit. But this is what's going on right now with cryptocurrencies. Now let's take a look at silver. Silver is trying to hold its gains that it made, and the thing is the reason why it's trying to hold these gains is because the dollar's on the move right now. Now, if you followed my program, what I said yesterday is I believe that at this point that the powers that be are going to have to allow gold and silver to rise in order to keep the dollar from moving upwards too quickly in price because of what they're doing with quantitative tightening. Quantitative tightening is starting to take an effect now at this point. During the first months of quantitative tightening, it was so small and so gradual that it didn't really have too much of an effect. But now the effect is being felt, and it's being felt in the dollar, and the dollar's starting to trend upwards, along with interest rates. At this point, what we're looking at is they're going to have to start relinquishing their hold on commodities in order to restrain the upward trending in the dollar, because what they're facing is a wall in front of them. If the dollar moves too much higher from this position, we're going to be faced with a tremendous emerging market crisis that'll bring the whole system down. They can't allow that. And so they're going to have to turn off the valve that's been suppressing the price of gold and silver at this point. And that's why I've predicted that we're going to start to see gold and silver very slowly trend upwards. It's going to march upwards, initially probably back up to the $17 mark, and then it's probably going to hold for a little while, and then it's probably going to make its way slowly up to 22 bucks. And this is what I'm predicting over the next few months, because they're going to have to do this to support the dollar. Just like on one side, when they were the quantitative easing, which was the loosening part, when they were putting money into the system, had the opposite effect on the dollar. And they had to try to support the dollar by suppressing the price of gold and silver. Now, everything is in reverse of that, because they've reversed the quantitative easing into quantitative tightening. They've reversed everything. So now they're going to have to try to support everything by raising the prices of gold and silver. This is what happens when you're a bunch of crooks and you're manipulating all the markets. This is what happens. And in the end, you paint yourself into a corner where you can't move either which way. In other words, you're caught between the devil or the deep blue sea. You don't have any choice. You're in a mess. And this is where they're at right now. They're in a mess. They don't have any moves left on the chessboard. It's like a game of chess when you got the king cornered and he has to move between two spots. And either spot, the other guy goes check, and then he moves back to the other spot, and the guy says check. I mean, he's cornered. At this point, the Fed is cornered. They've cornered themselves. They're boxed in. Nowhere for them to go. Anyway, so that's what I expect with silver. Look, the price of the dollar's rising this morning, and we see silver rising. We see silver rising 5 cents, and we see the dollar rising. That's not the way it's been all before. All before, when you see the dollar rising, you used to always see silver falling like a stone. And that's because they were manipulating it downwards. Okay, so let's take a look at the Dow Jones today. Kind of a boring market, you know. It's up 128 points. Oh, ho hum. It's up 128 points more again, you know. Everybody thinks to themselves that we're in a new paradigm, that the Dow Jones is going to float up to forevervilles. Well, you know, they're right. It is going to go up to the infinity. But first, before it gets there, it's going to crash. Now, I'm going to tell you what we're in for. We're in for the crash of a lifetime in the Dow Jones. It's going to be wicked. But when it bottoms out, and it starts to it starts to move up again, then the government is going to come in with free and loose monetary policy again, just like they did in 2008. And we're going to see this stock market really go up like you've never seen before. It's going to be the biggest bull run in history when we have the economic recovery that they're going to create when they dump all the money into the system. But they're also going to destroy the dollar at the same time when they do it. That's when we're really going to see the stock market go up to infinity. Not now. This is limited. This is limited. This is only going to go up so high before this falls hard. And I mean, when this falls hard, it's going to fall hard. So anyway, that's what's happening with the stock market. Let's take a look at oil prices. It seems to me like they're descending a little bit today. We're down, let me refresh the chart here. We're down 0.27%. And a little decline in the oil price right now. Bonds and rates. Now this is the interesting one. This is the one I'm interested in. We're up 3 basis points on the U.S. 10-year right now, and we're up just over 3 basis points on the 30-year. We're up today. Rates are going up. They're on the rise again today, and this is where I'm really interested in. This is something that I watch myopically. I mean, this is it right here. This is the baby. This is your indicator for the market crash. I've already said it, and I've said it a lot of times, that the U.S. 10-year is the one to watch, and this rate right here, and when it gets up to 3.25, that's our market crash time. That's crash time. Well, it might not happen exactly immediately the same day it hits 3.25, but, I mean, it's ready. It's like a diver climbing the diving board, and he perches on the end of the diving board. That's what the stock market's going to be when we hit 3.25. Okay, so now let's take a look at the U.S. dollar index right now. 95.57. And you see her easing up there today, higher and higher, right? The Fed is going to be more and more desperate. As she goes higher, this is putting more and more pressure on them to stop with this silly policy of quantitative tightening. But they're not going to. They're going to say, hey, you know what? We got to keep this policy of quantitative tightening going. And so what are we going to do? Well, we're going to have to start relinquishing our hold on gold and silver and oil. And that's what they're going to have to do in order to try to bring this dollar under control. Because if it gets up too much over, let's say, 97, I'd say about 97 or 98 is the mark. The emerging markets are going to start really getting in trouble. And so that's where we're at with this. As long as they can keep it below, say, 96, 95, emerging markets, you're not going to hear too much about the emerging market crisis. But if it shoots up, all of a sudden the emerging markets are going to be all over the news. Listen, thank you guys for listening. Like and subscribe, and we're going to catch you in the next market report. Bye-bye, guys. We'll see you tomorrow. let's see. Tomorrow's Thursday. See you later. Bye-bye, guys.